I get the excitement over some of the things the administration is doing, and I'm supportive of some of it. I don't think, let me say this, I think the problem is too far, I think we're too far gone. If we see the markets indicating that there's true failure in the financial system, they've only got one tool, Natalie. The tool is the printer, and they're gonna just run it hot. And so whether it's XRP or maybe they take it to 3 or 4%, who knows? But we know they have to create more monetary units mathematically, or else the thing collapses. We had a big print in 2008. We had a bigger print in 2020. There will be another big print.
Respected advocate of sound money and experienced portfolio manager, Lepard, has long been forecasting an impending global financial crisis. According to Lepard, the fiat monetary system is nearing its breaking point, collapsing from within due to unchecked spending and borrowing. In anticipation of this crisis, Lepard believes central banks are on the verge of launching an unprecedented wave of money printing far exceeding what was seen during past economic downturns, including the 2008 financial crash and the pandemic stimulus. He explores these issues in his book, The Big Print: What Happened to America and How Sound Money Will Fix It. In this work, Lepard highlights the harmful effects of fiat currency and inflation on the US economy, advocating for a return to sound monetary principles. Lepard argues that the current financial system built on excessive debt and continuous currency debasement resulted in major economic imbalances, such as inflation and growing wealth inequality. He asserts that adopting sound money alternatives, like gold and Bitcoin, is essential to restoring financial stability and long-term prosperity. In a recent conversation with journalist Natalie Brunell, Lepard acknowledged certain efforts made during the Trump administration to curb government spending. However, he emphasized that the scale of intervention required goes beyond what any politician is likely willing to undertake. As a result, he maintains that central banks will resort to large-scale money printing as the only way forward. Due to years of reckless fiscal policies, this next phase of monetary expansion, aptly referred to as the Big Print, will likely surpass all previous Federal Reserve interventions, including the trillions spent during past crises. We'll share key insights from Lepard's discussion with Natalie Brunell shortly. But before we dive in, please take a moment to like this video, subscribe to the channel, and enable post notifications for more updates. Your support is greatly appreciated now. Let's get started.
I try to avoid politics of all stripes, okay? Because I don't want to offend anyone in Camp Red or Camp Blue. I tend to lean a little more towards red, particularly with respect to Bitcoin. But having said all of that, I think what's going on here is, and I'm very supportive of Doge. The government's got a lot of fat in it. I think what Elon and Vivek originally were trying to do, to a degree, it's a worthwhile thing. However, let's be practical about what can be done. If you look at the federal government, they spent $6.75 trillion in last fiscal year. 80% of that is Social Security, Medicare, interest, and defense. So 20%, 1.3 trillion, is all they could go after, and they can't cut it all, obviously. And the deficit run rate right now is about 2.4 trillion. So, unless you want to reform the entitlements or end all the wars and take defense and the defense footprint back a lot, or you want to get interest rates down lower, which they may have to do. They may have to go to yield curve control to bring interest rates down. I don't see how you balance the budget. I mean, so while I get the excitement over some of the things the administration is doing, and I'm supportive of some of it, I don't think, let me say this, I think the problem is too far, I think we're too far gone. I really do. And so the book describes all the various paths, and none of us know with certainty what's going to happen. But, the general conclusion of the book, the reason I titled it The Big Print, is we're in a system that's constructed so that you have to print money to keep the debt burden from collapsing. This is Lynn's "Nothing Stops This Train" meme. And, we had a big print in 2008. We had a bigger print in 2020. There will be another big print. And so, in my opinion, as I said in the book, I feel like I want to stand on a soapbox and scream at the world. We're in a sovereign debt crisis, folks. You've got to protect yourselves from the oncoming inflation, because there's going to be more of it.
Can't we keep this going on and have many more prints?
Yes, possibly. But two things about that. One, yes, but they will be inflationary. So you want to be in things that can protect you from inflation, because there will be more prints, and they may hold the whole system together. I mean, to be totally honest and fair, I thought it was all over in 08, and of course they've kicked it at 16 years from 08. So it could be 16 years from now. but I think you can see the trend and where it's going. I think one of the things that's notable is that the prints are getting closer, somewhat closer together, and larger and faster in magnitude. Bernanke printed 3 trillion in 2.5, 3 years. Powell printed 5 trillion in 18 months. Money supply went up 40% in 2 years. I mean, so you're a working person. You've worked your entire life. You've tried to do the right thing and save your money. And they come along and they devalue all of your years of work by 40% in 2 years.
Mm-hmm.
I mean, it's tragic. And so the math, as you see, anyone who plays around with compound functions knows that eventually when you compound something enough, it starts to go vertical.
Mm-hmm.
And that's what's kind of going on with the U.S. interest expense right now, if you look at the chart of the U.S. interest expense. So it kind of feels to me like we're getting to the point where it is definitely going to break. There's another thing in the book that I think is very helpful. There's a chart by Hirschhorn Capital where he shows last 100 years, 11 instances of countries that have gotten to 130% debt to GDP. In every single case, they had a currency event, either very high inflation, hyperinflation, or collapse.
Yeah.
And so we're at about 125% GDP. So it kind of feels imminent to me. Now, by imminent, I would say, I think this whole thing gets resolved by 2030. So 6 years isn't imminent, but it's, I invest with a 1 to 5 year time frame. So it feels to me like it's coming soon.
Lepard strongly advocates for hard assets like Bitcoin and gold, believing that the current monetary system is unsustainable due to excessive money printing, rising government debt, and the ongoing devaluation of fiat currencies. Gold has historically been a reliable store of value due to its scarcity, durability, and widespread acceptance. Unlike paper money, it cannot be artificially created, making it resistant to inflation and government interference. Lepard views gold as a safeguard against financial instability, noting that during periods of crisis, investors often turn to gold as a safe haven asset. With a track record spanning thousands of years, gold has preserved wealth through economic downturns and currency collapses. However, Lepard considers Bitcoin an even more transformative form of sound money. It not only shares gold's qualities of scarcity and inflation resistance, but also offers additional benefits such as portability, divisibility, and decentralization. Unlike traditional financial systems that rely on governments and central banks, Bitcoin operates on a decentralized network, making it immune to manipulation by any single entity. With a fixed supply of 21 million coins, Bitcoin is designed to counteract inflation in a way fiat money never can. Lepard believes that as trust in traditional financial institutions continues to erode, Bitcoin will become an increasingly valuable tool for wealth preservation. Now, let's return to the discussion.
In my opinion, we are in a sovereign debt crisis. We are at the cusp of the gradually turning into suddenly phase. And the two best data points to support that are that the U.S. Treasury bond used to be the base layer of the financial system for years. It was a safe place to put money. It wasn't going to get debased and you earned a yield, okay? Since 2020, in Treasury bond terms, gold is up 200%, Bitcoin is up 2,000%. That, to me, those are canaries sitting there keeling over in the coal mine that, we got a problem here. We got a serious problem. And so, but yes, I found it interesting that Percent got in there and he said, all the gold is definitely there. He had to have been read in on that. There's no guarantee. He doesn't know if that gold is there, and neither do we. Ron Paul told me he's pretty sure it's not. I don't know what Ron Paul knows, but it hasn't been audited since '53. So and now Trump says he wants to go down there and check it out. I don't know. And by the way, it points out the difficulty with gold versus Bitcoin. And don't get me wrong, I'm a gold guy. I've always been a gold guy, still support gold, but you can't verify it, right? You don't have a blockchain. You can't see it. Mm-hmm. China says they've got 2,000 tons. I think they've got 20,000 tons. Yeah. Right? It's very hard to figure out where the gold is.
So do you think that we're going to go back to ZIRP, zero interest rate policy?
Yeah, well, I think they may have to. It comes down to how this unfolds and if something breaks. I think one pattern we have seen is that the Federal Reserve has 2 mandates, but really a third unspoken. The 2 Fed mandates, as in the 78 Act that they passed, are, manage towards full employment and price stability. And of course, they've come to define price stability as 2%, which is a lie. But for the sake of argument, that's what they're supposed to be doing. The third mandate that they've talked about a lot and acted on, but it's not written in the law, is what I call functioning financial markets. Mm-hmm. And so, and the math would suggest that you cannot grow GDP at 8% a year, grow debt at 8% a year and grow GDP at 4% a year without eventually that widened gap creating discomfort and a break in the financial markets. That's Hirschhorn's point of 130% debt to GDP. And so when that occurs, everything's off the table. I mean, there was a Powell pivot in 2019. I mean, Powell tried, when Powell first got into office, he actually tried to tighten. He wanted to go back to a smaller balance sheet. And, the bond market threw up on it and said, no way. And he had to pivot, right? And then COVID came along and there was a crisis there and they pivoted again. And in 08, they pivoted. I mean, if we see the markets indicating that there's true failure in the financial system, they've only got one tool, Natalie. The tool is the printer, and they're going to just run it hot. And so whether it's ZRP or, maybe they take it to 3 or 4%, who knows? But we know they have to create more monetary units mathematically or else the thing collapses.
Lepard warns that we are heading into a period of severe monetary instability, where fiat currencies will lose value at an accelerated pace. In this environment, he emphasizes that assets like gold and Bitcoin are critical for protecting financial security. While gold has maintained its value for centuries, Bitcoin presents a modern, digital alternative suited for the era of rapid technological advancement. By holding these assets, investors can safeguard themselves against the risks of currency devaluation and the potential collapse of the current financial system. As global economic instability grows, the importance of securing wealth in sound money has never been more pressing. Lepard's insights underscore the urgency of preparing for the long-term consequences of reckless monetary policies. While central banks may attempt to delay the inevitable by injecting more liquidity into the system, history has shown that such actions only lead to inflation, economic distortions, and declining purchasing power. In this landscape, gold and Bitcoin stand as the last true strongholds of financial security, one with a legacy of resilience, the other offering a decentralized, technologically advanced alternative for the digital age. The choice is clear. Those who take action now by diversifying into hard assets will be in a stronger position to navigate the financial challenges ahead. Do you think Bitcoin or gold is the better hedge against the coming crisis? Let us know your thoughts in the comments. If you found this discussion insightful, don't forget to like this video, subscribe to the channel, and turn on post notifications so you never miss an update. Thanks for watching, and we'll see you in the next video.